All right, so I've had a lot of subscribers reach out to me asking if they could purchase a membership or a one-time fee where they could download my investment portfolio tracking spreadsheet here. Then I sat back and I thought about it. So one of the main goals of my channel is just to spread my investing knowledge wherever I can to help other investors on their investing journey. I could have totally uploaded my spreadsheet and charged people a fee, but you know what? That's not the main goal of my channel. So I want to try to show you all how to make a completely free portfolio tracking spreadsheet step by step using Google Sheets. So without further ado, let's go and dive right in on how to make one of these investment portfolio tracking spreadsheets. So this is my portfolio tracking spreadsheet, and we're going to recreate this here using Google Sheets. So what I've done is I've gone along and copied the headers here just to save time. And I'm going to make a sample portfolio using 10 stocks just to show you step by step how you can do the same for any number of stocks and your own portfolio holdings. So we're going to go through each header pretty fast. So again, the beauty of YouTube is you can pause or rewind or screenshot. So again, please use that to your advantage as I'm going to try to go through this decently fast just in terms of convenience. So first, company, we're going to be looking at the company that you're investing in. So the first one we're going to be looking at is Microsoft. So this is going to be Microsoft. Now the ticker that it trades under the exchange. So this is going to be that 3 or 4 letter acronym that they have for the exchange. So for Microsoft, it's MSFT. So the sector here, so the sector that operates in is technology. Now the number of shares, this is the number of shares that you purchased or that you own. Now just for simplicity's sake, I'm going to say I bought 10 shares. So market price, so the trading price or the market price currently, that is what this is. And for this, we're going to use a formula using Google Finance. So I just go to GO, type in Google Finance. And then what they want to do is look up the ticker. So this is a criteria to be able to pull this from Google Finance. So you need to enter the ticker, and how you do that is just by clicking this cell here. So that cell is B2 or MSFT. And then what we want to do is get the most recent price or trading price. So you use the quotations, enter in price, PRICE, and then close the bracket here. And that gives us the most recent trading price of Microsoft. And the beauty of this formula is that it's updated continuously as Google Finance is updated continuously. So you don't need to manually enter this section or this column in. Now the market value here, that is just going to be a function of the number of shares that you own multiplied by the market price. And that is going to give you a total market value here for your holding of Microsoft being $3,500. So we have book value and cost per share. So the cost per share, I'm just going to assume that you paid $270 when you bought Microsoft. So you pay $270. Now your total book value or your total cost value, this is going to be a function of the number of shares that you had or that you purchased times that actual price that you paid per share. So that's going to be right there. So you actually paid $2,700 for your initial holding of Microsoft, and then your market value here is $3,500. So you should be in a gain position. So that you need to calculate here using the gain and loss section or column. So how you do that is you take the difference between your market value minus your book value. So you're up $828 in terms of a dollar value here for your Microsoft holding. Now, how do you compute that as a percentage? So you take your gain or loss, and then you divide that by your actual book value. So you're actually up 30.67% on this holding of Microsoft. That is super great. So great position here. Again, this is a pretend holding, and this is a whole sample portfolio, but if it was, that's a pretty good gain if it was a real position here. So the annual dividend per share. So this is a formula that's actually pretty complex. So I'm going to share with you, and again, I'll drop it in my description as well. So please refer to my description if it's a little hard to follow here. I'm going to copy it from my formula here. And it's using the FinViz quote. So again, it is a pretty long formula. So I'm just going to copy it, and then I'll paste it to my criteria here. And now, as you can see, we do need to change some of these numbers or these references, otherwise it will not be pulling the correct information. So what I want to do is change the cell that is the reference, and that is the ticker. So from O2 I changed it to B2, and then again you have another reference here as well, and I'm going to pick the same cell here. And now this should give me the actual annual dividend per share of Microsoft. So it's pulling the data from FinViz, and feel free to check that out on your own time. It's a great free resource for quotes, but again, it's pulling the actual annual dividend per share. So again, this is going to be updated automatically as well. Now the dividend yield. So the dividend yield is a function of this annual dividend income. So what we really need to solve for first is the annual dividend income. Then we can compute the dividend yield. So the annual income here is going to be the number of shares that we own multiplied by the annual dividend per share. So for this holding, Microsoft roughly pays us about $30 or $29 in dividends. So to compute a dividend yield, we will take that annual dividend income, we will divide that by the actual market value of our Microsoft holding. So it gives us a dividend yield of roughly 0.83%. And the beauty of this is all formulas. And once we complete this first row, adding additional holdings to your portfolio is going to be super, super easy. All right, so we have these three columns left: percentage of annual income. Now this one you can't really do until you have all your holdings, so we'll be looking at that at the end. The current allocation, same thing here. You can't do this until you have all of your holdings in place, but the desired allocation we can put. Now again, I'm just gonna say that we want a 10% position in Microsoft. So I'm going to do an equal weight portfolio holding, 10% in Microsoft, and we'll do 10% for each of the other ones as well. So that was Microsoft for the first holding. Now let's go and look at how easy it is to add a different security. So what I'm going to do is copy this whole row, and then I am going to paste this whole row. So it's done. Exactly the same function here. It's copy and pasted the Microsoft holding, but now I want to add Apple. I actually purchased Apple in this portfolio as well. So I'm going to type in Apple as the company, type in the ticker, which is AAPL. It's in the same sector technology, and I'm going to say I have 10 shares of Apple as well. Now, if you noticed, when you change this ticker, because we used formulas, a lot of these columns actually updated. So your market price, because it's a formula, and it's a function of the ticker, has updated for the price of Apple. And consequently, your market value has also updated. Now the part or the column that hasn't updated is this cost per share. So you need to manually enter this again. So let's say I bought my shares of Apple for $145. Now I've put in my cost per share, and the book value has updated as well as my gain and losses. So you can see I'm up about 21% on this position of Apple. So these have automatically been calculated. The annual dividend per share is also a formula, so that has been automatically updated. The dividend yield, a formula, automatically updated, as well as the annual income. So really the columns that you need to update whenever you add additional security or you make changes is these 3 or 4 in the beginning. So that being the company, the ticker, the sector, the shares, and then your cost per share. All of the other cells or other columns, because they run on formulas and functions, they update automatically. So that is the beauty of this spreadsheet. It's very, very minimal effort once you get that initial holding in. So we've looked at Apple. Let's do another one. Let's see how easy this is. So we're going to copy this again. Then we're going to paste it again. And instead of Apple, we're going to be looking at one of my favorite banks, JP Morgan, the ticker symbol being here JPM. That is in the banking sector. And let's say we have 5 shares of JP Morgan. And again, the market price is updated, the market value, and we need to update our cost per share. Let's say I got to JP Morgan at 120 bucks. All right, so my gain is $115. I'm up at 19.17%. This is a higher dividend paying stock, paying about $4.10 per share. Annually, it's a higher dividend yield at 2.87% and provides me with great dividend income here. So that's JP Morgan, and I'm going to kind of breeze through these next ones just so you can see how easy it is. I'm adding Visa, ticker symbol V, payment, processing. So we get 10 shares of Visa. All right. So as you can see, it's super easy once you get that initial first security in, or that initial first step. I'm going to say I bought Lowe's at 200 actually. And this is going to be our first holding in here that I was actually in a loss position. So as you can see, the cost per share here was lower than the actual market price or market value. So it computed that loss here as $50 in the hole, or down 2.53%. That Lowe's. Now let's look at another popular company that we invest into. Cost, same. 5. All right, let's say we're actually up in this position. We bought it at 450. Trading with Union Pacific, one of the railroads that I like. Say we paid 220 for it, and then we'll do two more. We'll look at some in the REIT sector. So again, let's say maybe, again, I've been adding to REITs recently, so let's say we've been adding to some of the ones that I like. So again, Vici Properties. So we paid $30 for that, and then let's look at adding another REIT. So let's say we added Agri Realty, and it was ADC. And 10 shares, let's say we paid $65 for that. Actually, let's make it 5 shares. Okay, so we've gone through this, and you saw how easy that was. So I basically added 10 holdings using a lot of the same information or formulas from that initial Microsoft example. I really just updated 4 or 5 columns, being the company, the ticker, the sector, the number of shares that I bought, and the cost per share. All of the other sections were updated automatically using the formulas. So now that we have this, I want to show you how you can actually look at the data in aggregate or the relevant totals. So we want to look at the sections that we want to actually total, so we can just look at our portfolio and look at those relevant sections. So for here, it's market value, book value, the gain and loss, so the total gain and loss in the portfolio. Again, this is just on a share or stock price basis. This does not count dividends. And then here's your dividend information here. So let's go and do that in our example. So one thing I want to do right away, again, I can zoom in here a bit, is when I'm looking at my spreadsheet, I don't like how when I go to the right and I look at other information, or if I even zoom in a little bigger, it's that I lose the company name. So I can't see what company is here. So what I'm going to do here is I'm going to actually click this column, and I'm going to go to view, and I'm going to go to freeze. So this is freeze panes, and freeze the first column here. So one column. Now, as you can see, is there's a thicker line, and when I actually scroll to the right, that company name stays there. So I can see exactly all of the information relevant for that one security. So I know I'm looking at Microsoft's information, I know I'm looking at Apple or JP Morgan, and it's nice and easy to follow as I scroll to the right. Now another cool trick here is I don't really like using these lines in Excel. It's great for initially making your data, but after that it kind of just looks a little messy. So what I like to do is I like to go to view and then show, and then there's grid lines here. You can take the grid lines off. Now it's just a clean, plain spreadsheet, and in my opinion, that looks a lot more professional. It's a lot more easier to follow. So just those couple of formatting tips here. Again, you can do whatever you want with formatting. You can change the lettering here, the colors. There's so much you can do in Excel. Make additional borders. So again, that's just my own personal preference. But let's look at the relevant data here and let's make the totals. So we have market value here. So what we're going to do is look at the total market value of our portfolio. I'm going to use that using a sum formula, so equals SUM. And Google Finance or Google Sheets is really nice. It just picks up the formulas that it wants you to sum, but I'm going to show you how to do that if it didn't. So you just select those and then sum your relevant columns and close the bracket. So we got about $16,000 worth of this portfolio in USD. Now what we want to do is do the same formula here, but for the book value. So to see how much we actually paid. Now you can just drag this across, or you can do that same sum formula in here. So if we just drag it across, it copies the formula over, as you can see, and it tells you how much we actually paid for this portfolio. So that is super, super great using simple sum formulas. Now what we want to do is the exact same thing here, but for our gain and loss. So we're going to look at that. Look at the total gain and loss of this portfolio. So basically we are up $2,300 in this sample portfolio. That's a great gain here. Again, it's all pretend, but that would be super great if it was a gain. So that's how you would sum up your total gain and loss in aggregate here. Now we also want to know our percentage gain and loss. So this formula is a little different. You do not want to take a sum of these. How you would do that is calculate the byproduct of your actual gain and loss divided by your initial cost or your book value. So Google, again, it knows what you're doing. It's a super smart spreadsheet here. So what we're going to do is take our gain and loss, and then we're going to divide that using the slash button by our total cost paid. We're going to go equals. So we're up basically 15.9% on this portfolio, as you see here. So that is great. Now the next column that we're going to be looking at is the annual income. So we want to know how much income this portfolio provides to us through dividends. So it's going to be another easy sum formula. And as I've said before, this is super easy to make. So a lot of these formulas are pretty routine. So if you're decent in Excel, you should be able to do it. So again, $212 here in annual dividend income. So what is the dividend income here, or the dividend yield on our portfolio? So we're going to be taking, again, Google Sheets is super fantastic. I just hit the equal sign and it kind of auto-filled the formula that I'm going to show you, but I'll click the cells nevertheless. So the annual income here, the total annual income, I'm going to select that cell, divide that by the market value of all of my holdings or my portfolio, and that will give me the current dividend yield. So the dividend yield here is 1.26, so a very small dividend yield. And again, that's because a lot of the securities here are held in more lower dividend paying companies, or companies with a lower dividend yield, more focused on growth, like Microsoft, Apple, Visa, MasterCard, Costco, and Union Pacific as well. So again, lower dividend yields. You do have higher ones like Lowe's and then the REITs, but they do not make up the majority of the portfolio. So the dividend yield is an actual 1.26%. All right, so these columns we actually left blank the percentage of annual income and the current allocation for each of our specific holdings. So what we're going to do is look at the percentage of annual income. So this column is going to tell us how much each of these holdings pays us in terms of a percentage of the overall portfolio. So we're going to go equals in this column, and then we have the annual income here. So we're going to be looking at Microsoft. They pay us $29.30. We're going to hit the divides, which is the slash button. Then we're going to select the cell, which is the total dividend income. So what we want to do though in this formula is we want to freeze this purple cell here, because we're going to be using the same total for each of our formulas. So how you do that is you click in to this formula bar, and then you hit the $ in front of the M, and then you hit the $ in front of the 12. This then tells Google Sheets to freeze this cell. The other cell will move, but this cell will freeze, and then you hit enter. And that now tells us that this is 13.82% of our total dividend income. So in other words, Microsoft pays us 13.82% of our total dividend income. So autofill, you can just click autofill if you wanted for each of these, and it's super easy, and Google Sheets knows what you're doing, so you could just fill it down. But I'm just going to do one more just as an example. So again, it also knows that you're doing the same thing, but I'm picking that cell over here. I'm going to divide it by the total, and I'm going to enter in the dollar amount here as well. Perfect. So now we know Apple pays us 4.72% of our total annual dividend income. Now that you've seen it twice, I'm just going to scroll down here and drag down the formula. And then we have how much each of these holdings pay us. So as we can see, the highest dividend payer here in this case is Lowe's, giving us 20% of our total annual dividend income. Now we just want to do a check and run a sum formula to make sure that it equals to 100%. So we'll pick all of these. And there you go. So we know that the formula worked. It makes up 100% of our total annual dividend income and each of the percentages that each of these holdings pays us. So what about the current allocation? So again, this is going to tell us how much of a percentage each of these companies make in our overall portfolio. So this is super useful when matching it against your desired allocation. So I did an equal weight here being 10% each because there's 10 holdings, and that will equal to 100%. But if you wanted to have a higher percentage in one of these, you could totally adjust that. But let's go and look at what each of these actually make up right now. So we're going to do another formula. So the current allocation, that is going to be a function of our current market value here for each holding. So if we're going to be looking at Microsoft, I'm going to pick the market value. And again, similar to how we did the dividend income, we're going to divide that by the total market value of the total portfolio. And as you can see here, it's already populated 21%. But we want to freeze this cell as well using the $ method. And just like that, we have the same exact method here, except we're doing it as a percentage of the total current allocation. And what I'm going to do here is I'm just going to click autofill because I like that Google gave me that option. It saved me a lot of time. And I'm going to go back and add the borders here. So the bottom border and then also the top border. And then we will make this a nice bold color here. So that is the current allocation. And as we saw, it is 100% of the total portfolio. So again, super great formula here. And this tells me that, whoa, I'm super overweight in Microsoft. So I might need to trim my Microsoft position, take some gains if I wanted. I'm basically in line with Apple. I need to boost up some of these other positions and reallocate some weightings to these REITs here, which are a lower position compared to my desired allocation. So that is basically the bones of how to make this. Now I want to show you some other cool tricks, again, because it can be a little confusing when you're looking at this compared to mine, but I do find this other part pretty relevant. So when I look at my gains and losses, if I'm looking at it, comparing this on my own portfolio tracking spreadsheet to this sample one that we made, I have to look for these specific minuses or the pluses, and I can't really tell just off the top of my head or just looking at them initially which are in a gain and loss position because there's no colors here. So mine actually has colors here. I can see what is in a gain and loss position and what is not, because the ones in a gain position are the ones in green, and then the ones in a loss position are the ones in red. So I don't actually have to manually do this. What I'm going to do is use something called conditional formatting. So conditional formatting allows Excel, or in this case Google Sheets, to automatically update the colors on a set of rules that you set in terms of predicting whether it is in a gain or loss position. So if it's in a gain position, it'll be color coded in green, and if it's a loss position, it'll be color coded in red. So I'm going to show you how to do that right now. So what we're going to do is select all of these cells, and then we are going to go to format. We're going to do conditional formatting. So as you can see here, there are rules. They call them rules, and it's auto selected here in terms of green. You can pick whichever color you wanted. If you wanted to do blue or red or whatever color. But green and red is probably the easiest here in my opinion, because you know green means it's in a positive position and red means it's in a negative position. So I've already selected my cells here. That's this range. And I'm gonna make a rule. So I'm gonna click the rules and I'm gonna say, okay, if this value is greater than 0, so anything greater than 0, that means that it is in a positive position or I am in a gain position. So that is my first rule. Now the next rule for this is I'm going to do the exact same thing, but it's going to be in a less than. So if it's less than 0, I want it to be in a red color. Sorry about that. There we go. So as you can see, it is now in a red color for my positions in a negative or loss position. So that is all it takes, and you just click done. And now you have both of those rules on this column telling you whether you are in a gain or loss on each of your individual securities. And the total portfolio here is in a gain, so it is in a green color or a positive position. Now let's go and do that for our percentages as well. So we're going to select it. I'm going to go a little bit faster here. Go conditional formatting. And then we're going to format if it is greater than 0. It's in a green position. And then I'm going to add another rule. And if it is less than 0, it is going to be in a red color. Click done. And just like that, we can see what positions are in a gain or loss in the red and green colors. So that was just some additional formatting that I like to do. And the beauty of Sheets is you can do whatever you want in terms of formatting. You can add borders, you can do a bunch of things. So that was basically the how to make a completely free portfolio tracking spreadsheet in using Google Sheets and Google Drive. So if you had any comments or questions and you were unclear in any of the steps, please leave some of those in the comment section below, and I will do my best to answer those. Again, the whole point of my channel is to just share my investing knowledge and my tools with you all completely free. I'm not here to make any money or anything like that. I just want to share my investing journey and any knowledge I have along the way with you great people here on YouTube. So if you like the content, give me a thumbs up and subscribe to the channel. And without that, I will see you in the next video. Thanks for listening. Bye. Please note I am not a financial advisor by any means. All this content is merely for your entertainment purposes only. Please do not make any investing decisions without consulting the advice of a professional. I am not liable for any investing decisions or losses you make or incur. Thank you for watching. Have a great day. Bye.